Good morning, good afternoon, good evening, traders from around the world. My name's Alan, and I'm getting set for the Forex trading week. So this is kind of what I do on the weekends. Try to get an idea where I think the market's going to be going. So first thing I do is I want to go look at a calendar. Any economic calendar will work, whatever you're used to using. I'm looking to see what's going to have the biggest impact. Anything here that's marked with 3 of these heads here, what I'd be interested in. Also, I look to see who's on holidays. It's also important to know. So we have here Sunday, May 11th, and currently there's nothing to be concerned about with on Sunday. Monday, excuse me. Don't really see anything on Monday that we're going to be concerned with either. We have one talking head here going to speak, but probably not going to move the market much. So Tuesday we have some Chinese news that may get the markets moving just a little bit. That's important to know. Also at 8:30 on Tuesday morning we got retail sales, so we'll probably make a news trade out of that one. Then we have New Zealand here. I usually don't trade New Zealand. Spreads are too high for me since I'm a scalper. 4:30 in the morning we have some pound news. This will be on Wednesday. I'll probably will try to news trade that one. So that may get the markets moving a little bit. Some more pound news there. We'll probably try to get a trade in on those. Maybe get some breakouts on these news events as well, for those of you that trade breakouts. 8:30 PPI, probably either get a news trade or maybe a breakout trade on that one. See, Thursday got some Euro news here at 5. Probably won't move the market very much, but we'll be looking anyway. See what we can get there. 8:30 core CPI, would be trading that one. Philly Fed Index, this one's kind of tricky. Sometimes it moves the market, sometimes it won't. So we'll be ready for a trade there. Probably at this time of day we'll probably get a reversal on where the market currently is. We got Yellen going to speak here on Thursday. That's very important to know. So we got Friday. This is Friday. We got building permits. Probably not going to move the market that much, but may get a breakout trade on that one. So that's kind of what we got, looking at the week. Want to get a good idea of what those economic news releases are going to be. Make a few notes on those. Alright, now I'm going to take a look at some charts. And I primarily trade the euro dollar, so that's what I focus on here. So the charts that I look at first is to get an overall idea of what the long-term trend of the market is. So if we look here, we can see that on the monthly chart, we're still in a uptrend and a up cycle on the monthly. On the weekly chart, we're still trending upward, and on the daily chart, we are still trending upward. We've had a nice little leg down here, but overall our trend is up. And one thing I'd like to point out here that's to note on the daily, as you can see this area here, our last area of support we had. The next area that we would come into would be right here about 37.07. And also, our uptrend line that I've got here is kind of right along in line as well. Let's see if I can get another array. See where this one goes. Okay, and even that line puts us right about where we are now. So we seem to have all this area here that may create a little bit of congestion or actually some support. So what I'm thinking is we'll most likely maybe get a gap down today, maybe get down here to around this 37 level, and then probably resume our uptrend. So that's kind of where I'm going to focus at on the week, is look for a little bit of a gap down and then for the market to start retracing. And that's where I am on my long-term trend, where I think the euro may be going and where I want to be set to trade. Okay, the next thing I do is I go and I look at the more of the short-term charts to kind of look into get a little bit better feel of where the current market conditions are. So I look here at I've got the 60-minute, 30-minute chart here, and we've had this nice long downtrend here the last day and a half. That's of course due to all the talk coming out of the Eurozone. But one thing I would like to point out is you hear a lot of talk about measured moves. And the thing about measured moves is it's all about the algorithms that trade in the currency markets, because I think the current estimate is somewhere around 70% or more of the trading is done by computer algorithms. So what you end up with is a lot of times you get these measured moves just like this, and these are just quick thrown on the chart, but you can see how close they appear to each other. We had this first move here was 105 pips down, and our next, that was from here to here. Then we traded sideways a little bit. Then our next measured move down was from this point here to our low, which I've marked here at 94 pips, so it's really close. So we have those two measured moves down there, and so that kind of puts me more and more into the realm of probably seeing maybe a little bit of a congestion at this area, and probably the market's going to continue the trend back up again. So that's kind of where I'm looking at for the week. I'm going to expect the market to show some congestion around here, maybe get a gap down to that 37 level, and then continue to move from this point here. You get an arrow from this point probably back up into here is pretty much what I expect to see for the week. So I expect, a little bit, maybe like I said, another little congestion area here, maybe gap down 37, and then continue back up into this level. So that's what I'm looking at for the week, and that's how I'm going to be planning my trades. Of course, there's no guarantee that any trade plan is ever going to work. It's just to kind of get you a feel of where you think the market might be heading, and you never know. We may market may tank again Monday and Tuesday, and we may end up down at the 36 or 35 level. But you want to be as prepared as you can, and that's how I prepare for the weekend, over the weekend, for the trading week. So hope this helps y'all out. Maybe y'all come up with a plan that works for y'all, and you'll be prepared for the week as well. All right, one final thing. For those of you that trade the Forex price action scalping method, I wanted to go over a few additional trades that could have been taken, with the method that we use. And basically what we have here is overall our conditions for the day are to the downside, so that's the direction we want to be trading. The first setup here that could have been taken was a first break setup, and basically what we have is we have from our leg down at this point, we had all these bullish candles in a row, and what we're looking at here is kind of higher lows is what we want to see. Higher lows, higher lows, higher lows, all the way up, and then we have a doji candle at the top. But the first break comes at this lower low right here. So this is where we would want to enter at on our first break setup. And as you can see, it would have worked out well. But more importantly, the second break here would have been the prime entry on this one. And as Bob Volman states, the second entries tend to be much more powerful than the first. So the second entry would have been a break of this candle here, of this low. So we would have got in around this area here. Maybe our fill would have been a little bit bad, I'm not sure. But the point is, you would be in around this area. You could immediately place a stop up here, and this trade would have been a really good trade as well. So that was one or two good trades that could have been taken there. The next trade that we could have been taken to the downside would have been this double doji entry right here. And basically what we're looking at here is we have our pullback. It's we want to see a pullback, and this is important, to about the 40 to 60% level of our last move in that range. So if we were to fib this, which I'm not going to do, we want to see a nice deep pullback here a little bit. So we would want to enter right here on our doji to the downside, and at this trade here it would have worked out almost to the pip, because we would have got filled in here, looks like around the 66 level maybe. So we'd be looking to get out at 56. So our profit target would have been here at 56, and that trade would have worked out pretty well as well. The next entry we would have had would have been the block break here to the downside, and this one's kind of iffy, and this is one of those ones where for me to take this trade to the downside, I have to see a lot of volume coming in. So when I'm looking at a trade like this, I'm going to grab my time and sales, which of course the market's closed right now, so it's blank. But I'm going to grab my time and sales, and when I see the trade breaking to the downside here, if I see a lot of orders coming in here, then I'm going to go ahead and take the trade. And that's a key for me, what I do. Bob Volman, he trades slightly different than that, but that's what I do. I look for a lot of volume coming in, and if I see that volume is light, I'll tend to skip this trade right here. And the main reason I'm going to skip it is because of this area right here, this being our last low. So if we were just to come down here, break one pip, and it would not surprise me to see the market turn from this exact level here and shoot up. And that's what I would expect if volume is low. So I can't say for sure because I don't have what the volume is at the time. So if this was a high volume move to the downside, I would have taken it. If it's low volume, I would have skipped this trade. And if you would have taken it, you most likely would have want to got out. I would have given it room to move, because I tend to not follow the stops exactly the way Bob Volman does. I tend to give them 10 pips, and I'm just comfortable with losing 10 pips on a trade if I lose. So I probably would have got stopped out here if I would have taken it. If it was a high volume move and I would have got filled, probably would have got in here at 59. So 69 would have been my stop out level. So I probably would have just got stopped out here right to the pip. So I would have lost on that trade. Of course, according to Bob, he trades a little bit different than I do. He's a little more conservative. So at this point here is where you would have got out using Bob's method. So you would have got out here. So you got in here on the break, got a bad fill just to be on the safe side. You got in here at 60, 61. Then using Bob's method, you would have wanted to exit the trade right here at 63. So you would have got out almost break even. So, you know, it's a toss up which way is better. I tend to leave a little bit more on the table when I do lose. So if you're just starting out, you probably want to use his method to the T. That way it keeps your losses really small. So I hope this helps y'all out a little bit, those of you that do trade Forex price action scalping. And those that don't, well, maybe you learned something and scalping may just not be for you. So hope y'all have a good trading day.